Good morning, dear students. From AAT, we welcome all for today's webinar session for third level of our students. Under the subject Financial Controls and Audit, we are going to have the session with Mr. Tharanga Madhurapeli, who is a chartered accountant and possesses BSc in Accounting Special Degree and also a senior member of AAT Sri Lanka. Let me welcome Mr. Tharanga to conduct the session on Internal Control Systems and Business Process, Part 1. Over to you, Mr. Tharanga.
Okay. Thank you very much, Yamala. And good morning to all my dear students. Welcome to the second part of Chapter 3, that is business processes. Our chapter is Internal Controls and Business Processes, where we discuss the Part 1, the internal controls and internal control system last week, and today we'll be discussing the second part, the business processes. A bit of a lengthy area. We need to discuss 5 business processes. So I will explain in detail the key important areas in this chapter, and I think you can have it's not a very technical area in a business organization, how we can utilize the business processes to minimize errors and frauds of a business organization. So where a fraud or error can happen and how to avoid such situations. So that's what we're going to mainly discuss today. So there are some additional informations you can read and understand for your knowledge, but for the exam purpose and under the context of exam, I will explain the key areas within the given limited time period. So let me go to the formal presentation. Right. We are still in the third chapter, internal control system and business processes. So last week we discussed about the internal control system. So we talked about 6 types of internal controls: financial control, operational controls, compliance control, and at the same time detective control, preventive control, and corrective control. With all these 6 controls, we can create a matrix with 9 controls. At the same time, I told you that creating a internal control in a business organization it's not a overnight process, right? It's a very systematic process which includes 5 steps which we discuss under the internal control system. So today we'll come to the second part, the business process. So before moving to the detailed areas, I'll quickly explain where this concept of business processes is, where we can locate this concept of business processes in the context of auditing. So as you can see, this picture, I told you that from the day one I was explaining the same picture again and again, and I think till the last moment of your exam you have to keep this picture in your head, right? So the fundamental theory behind this the entire subject is the agency conflict, I told you, and this is the picture behind that. The shareholders or the principals have invested money in a company, but the company is managed by a different set of people called the board of directors, right? So obviously these 2 parties get some credibility issues, transparency issues. As a result, a conflict happened between these 2, right? So an independent third party called auditor has to come into the picture and do a review on the financial statements prepared by the board of directors and tell the shareholders, this is what has happened with your money you have invested in the company, whether it's well managed or mismanaged, right? So therefore the board of directors have a huge responsibility to make sure that the financial statements are materially accurate, right? The formal word you have to learn is whether the financial statements are materially misstated. Don't worry about the words. So we will learn in detail those words, and gradually you will get all these technical jargons into your vocabulary. So for the moment, the auditor will provide opinion to the shareholders whether the financial statements are correct or incorrect. So just assume what happens if the financial statements are incorrect simply, or the word we can use is the financial statements are materially misstated. So what happened if the financial statements are materially misstated? What will happen to the board of directors? There are so much of negative repercussions can happen with the incorrect or a materially misstated financial statement to the board of directors. So therefore, board of directors has to ensure that the financial statements are free from material misstatement. So the first step is they need to find out how a financial statement can be misstated. What are the reasons? Right. So there are two reasons. First one is errors, or the second one is the fraud. So error is something unintentional act, right? Or fraud is something intentional. Your intention is to misstate the financial statement. So because of an error, something unintentional, or fraud, something intentional. So whether it's intentional or unintentional, the financial statements are materially misstated due to an error or fraud. So then board of directors has to make sure that there are no any errors or frauds in the business organization. Then only they can make sure that the financial statements are free from material misstatements. So how they can make sure the company is free from errors and fraud is, I explained last week, to have a good, sound, solid business processes plus internal controls. So we discussed internal controls last week. So today we will take the business process as the area to discuss. So so these business processes have so under this, like in a business organization, there can be various business processes for based on the nature of the business organization. They can have their own business processes, and they can identify where a fraud can happen and establish their business processes plus the internal controls relevant to them. So under your syllabus, we are discussing some general business processes, which is common in almost all the business organization in the not only in the country, in the world. So with that, we'll move to the areas to discuss. There are 5 business processes we are to discuss in very detail. First one is, you can see the list: procurement process, payroll process, cash management process, inventory management process, fixed asset process. For your knowledge purposes, like there can be so much of reading materials on these processes, how to design these processes, and how to avoid errors or frauds attached to these processes, right? So what are the best practices? There are so much of reading materials you can use and refer for your knowledge purposes. So under this webinar, so I will quickly explain the areas which is where you need to prioritize for the exam with the limited time. So how error or fraud can happen in a given process, and what are the steps you have to implement to make sure that the error or fraud is not happening, right? So I will focus more on those areas, and other areas I will quickly touch and go, and you can read on your own to have a broader knowledge on this process area. So we'll take the first process, that is the purchasing process, or simply we call it the procurement process. Very important process in a business organization, and an area where a fraud or error can happen, right? So because most of the time, and I think not only in a company, even if we take a country as an example, right? So when the procurement happen, when the purchases happen, whether we are selecting the right vendor, whether we are paying the right price, right? Whether we are getting the quality service or the product, these questions are always there. Whether there are any other, whether we are paying something additional to this vendor or the supplier, or something involved in the purchasing process, getting a individual commission from this deal or the transaction. So it's a very complex area where a business organization can lose money, right? So therefore, as a auditor, internal auditor or external auditor. So this is a very good and a very important area for an auditor to focus and concentrate, because so much of errors and frauds can happen in this process. And there are some things like, if we take example as like these commissions. Let's say you are purchasing, you are the procurement manager of the company, you are purchasing, let's say 1,000 computers to your organization, and the supply is regularly like it's a huge deal, good business opportunity from the vendor side. So he is always willing to keep that business transaction with him. So he is willing to give the procurement manager the various gift, right? So sending hampers, right? Giving some commissions to these when the procurement managers, right? So sometimes, most of the time, these transactions are off the records as well. So as a result, this is an area where auditor should focus very much. The errors and the frauds happening in these areas are very significant and very common in a business organization, right? So this purchasing process has 4 sub areas we need to discuss. That is the supplier selection. First of all, we need to select the supplier, then we need to place the order, then receiving goods and payment. So in these 4 areas, how a fraud or error can happen and how to mitigate that, what are the controls we can implement to mitigate that frauds and errors. So that's what we want to discuss under this area, right? So these slides you can just read and understand. So what are the things you need to when you are selecting a supplier, what are the things you need to consider, whether the supplier is reliable, right? Whether the goods and services provided by him is with the required quality, whether the supplier is financially stable, right? That's also a very important point. Let's say you are a garment manufacturing company and you are manufacturing some garments to export to another country, right? So it's a huge order. You are having a so your supplier is also has to be capable, right? Solid enough like you to continue that order and to meet the target of the customers, right? So let's say you are manufacturing some garment items, so the required supplies should come from the vendor or the supplier continuously. Otherwise, you can't complete the order and send it to the customer. So what happens if your supplier is bankrupt? If he is not financially stable, so what will happen to your supplies, right? So it will in danger. So therefore, you need to make sure whether you are getting goods from a solid supplier, financially stable supplier. Understand, right? So then, yes, so there are a few areas, other areas like the good deliveries, the quantities required, all these things you need to consider when you are selecting a vendor. So you can focus those areas by reading, not very technical areas, you can understand easily, right? So the after selecting the supplier, the second step is to placing the order, right? So when placing the order, and the third one is receiving the delivery of goods, right? So these 2 processes is very important. These 2 parts of the process is very important because this is where a fraud or error can happen in most of the time, right? When you are placing the order and when you are receiving the goods. Okay, so this is where you need to establish a good process. I'll tell a small example. I think last week also I took this example. Let's say you are working in a particular company. You need to purchase a laptop computer for you, right? So your superior, maybe you are, let's say you are the account assistant. So your superior, the chief financial officer may say that, okay, you just purchase a laptop and give us the bill, we'll reimburse the price, right? So you go to purchase the laptop and you realize that, okay, it's 150,000. So you purchase the laptop by paying 150,000, and one of your friends is the computer seller, and you are asking the seller to, okay, write an invoice for 250,000. Understand, right? So you are getting an invoice worth of 250,000 and give it to the company accountant, and you get the reimbursement 250,000. That invoice worth of 250,000 is recorded in your general ledger, right, as a computer purchase, and it will go to your balance sheet at the end of the day as a fixed non-current asset, computer equipment, let's say a laptop computer, 250,000, but which is really worth only 150,000. Your financial statements are incorrect. And also you have done a fraud here. 150,000 worth of computer you have purchased at 250,000. And there's a fraud of 100,000, which is totally incorrect. So that is why in a business organization, these type of things can easily happen. So that is why you need to establish a process to avoid all these things. So then the first step is, if you need to purchase a computer, right, there should be a process to place an order first. Understand? So there should be a formal procedure to place an order to purchase a computer. Then that particular good should come to your company. That is the next part, the receiving goods, right? And it should be recorded correctly in the financial statement. So there are a few documents and a few steps related to these areas. I think it's easy to explain with the next slide with this diagram, right? So I'll quickly explain the steps and the documents. These documents are very important. So you have to keep in your mind, not only for your exam purposes, like if you are working in a business organization and in the accounting department, so these documents are very important because those are practically very commonly used documents in a business organization, very important, right? So in a good procurement process, there should be an independent procurement department. Let's say now I am working in the finance department. If I need a laptop or if I need some chairs, so what do you call this, table, furniture, or something, I should not purchase them on my own. Understand? So there should be a separate department called procurement department, which normally in a business organization, which is coming under the admin and infra, right? But there are some companies, these procurement departments is also attached as a separate line to the finance, right? Because there are so much of controls required. So there should be independent independent department to procure goods. So let's say you are working in the finance department, you need a laptop. So you are the requesting department. The finance department is the requesting department. You can see it in the first box. Then if you need a laptop, the first step is you should officially create a document. Normally these documents are available in most of the business organization. We call PRN, Purchase Requisition Note. And you are informing to that independent procurement department by raising a PRN, purchasing requisition note. Hey, look, I need a laptop computer, and that particular document should be authorized by your superior. Probably if you are working in the finance department, it should be the chief financial officer. He is signing and authorizing, yes, this particular employee, assistant accountant, he needs a laptop computer, just purchase, right? So you are raising that purchase requisition note and send it to the procurement department. Then the procurement department is the one who they are selecting all those suppliers. Supplier selection part is happening. So there can be separate process for that, right? Then based on the requirement raised by you, they are creating another document called purchase order, PO. Very common document and very important, purchase order. They are raising a document called, internal document called purchasing order, PO, and send it to the selected supplier. So you can see that after procurement department, it's the purchase order. Just follow the arrows, okay, with the diagram, purchase order, and this purchase order is sent to the supplier. Then supplier is delivering the goods to the warehouse or whatever the place. If it's a manufacturing company, most of the time the goods are delivered to these warehouses or stores. Now let's say if it's a computer, laptop computer, probably it will be delivered to the procurement office, right? So don't worry about the place, right? So it will be the supplier is delivering the goods to the company. Probably it's a warehouse. When he is delivering the goods, delivering the laptop, with the laptop, he is sending another document, which is external document, a delivery note, which is prepared by the supplier. He is delivering the laptop with the document called delivery note, right? So then the warehouse receive the goods and they can't just blindly accept the goods, right? So in a good process, sorry, in a good process. So there should be a formal procedures to see whether they have received the right good, whether with the right quantity, with the right quality. Let's say you have ordered a Dell laptop, right? But they have sent a HP laptop. Likewise, you need to check the requirements you have done. So let's say the requirements are not fulfilled, so then you can directly reject the order to the supplier back. So you can see that the no symbol, and then you can reject it. Let's say the specifications are right, what you have ordered is what you have received, right? So then the warehouse, the storekeeper, is preparing another very important document, which is called the GRN, good received note, right? So good received note, he keeps preparing the good received note, and he accepts the goods, and then he distribute the goods to the relevant required department. Now, based on that, the supplier is sending the invoice, right? So supplier is sending the invoice to the company, and finally, based on the invoice, the payment should be made. Now, we need to understand where a fraud or error can happen. Now, let's say for the requesting department, they can't do any fraud or error here, because that purchase requisition note is prepared with the approval of that relevant department's head, right? So the possibility of having an error or fraud is really minimum there, right? Then when it comes to the procurement department, so they are also, I'll explain this with a small example. Now, let's say this particular user department will take a manufacturing organization, right? So let's say a garment manufacturing. So this production department is requesting, okay, we need 1,000 meters of clothes or the fabric. We need 1,000 meters of fabric, right? Then they are informing the procurement department by raising a PRN, we need 1,000 meters of fabric, and the procurement department is with the intention of making a fraud, right? So they are making a purchase order, right, worth of let's say 700 meters, not 1,000 meters, 700 meters of fabrics, and they are putting the order. Then the supplier is sending only the 7,000, but he is invoicing 1,000 meters, like he supplied, and this has to be done with the combination of the procurement manager and the supplier, right? So actual goods delivered to the company is only 700 meters, but an invoice is coming worth of 100 meters fabrication, and the company is paying for 1,000 meters, but the actual goods they have received is only 700 meters. So the company has paid something in addition, and that additional amount may be distributed or shared by the supplier or the supplier and the procurement manager. So that's how an error or a fraud can happen, right? So now we need to understand, by using this document, as I told you, very important, how by using these documents, how you can minimize the errors and frauds that can occur, right? Now, the initial step is the initial document is the PRN, and the next document is the purchase order. So therefore, there should be an internal control to make sure that the procurement department is ordering through purchase order is 100% equal to the requirement of the PRN. So simply the PRN and the PO should be equal. There cannot be any mismatches in the numbers. If they are requesting one laptop, the purchase order also should be for one laptop, right? Or else there can be some organization, let's say there are few departments, like the finance department is requesting one laptop, and the HR department is requesting 2 laptops. Now there are 2 PRN, purchase requisition notes. One is worth of 1 laptop, and the HR department's PRN is for 2 laptops. Altogether 3 laptops. And the procurement department can raise a 1 purchase order to purchase 3 laptops at once. Understand? So in terms of the numbers appear in these documents, it has to be agreed. 1 purchase order can represent 2, 3 purchase in requisition notes, but the quantity required has to be the same. And also the purchase order has to be then equal with the delivery No, if there can be many mismatches. Let's say the company is requesting 10 laptops, but the supplier is sending only 8, claiming that okay, another 2 will be sending later, or something, some reasonable justifiable reasons can be there, right? But most of the time it has to be tally. We are requesting 3 laptops, and the delivery note also should come with 3 laptops, right? So, and the most importantly, this delivery note is something external, which is not prepared by us. Therefore, we don't have any control over that, right? So that is why once we accept the goods, we are preparing our own internal document, that is good receive note, GRN. So therefore, that what is most very important is not the delivery note, which is also important, but you have to give the priority not to the delivery note, to the good receive note. It doesn't matter how many items you have delivered. What is important is how much of goods we have received to the stores. Understand? So therefore, obviously, the purchase order and the good receive note has to be equal. So we are ordering 3 laptops, then 3 laptops should be received to the warehouse, right? So based on that only the invoice is raised, and finally the payment is made. So when the payment is made based on the invoice, definitely the accounts department should cross-check this invoice with the purchase order and the good receive note. So these two documents is very important, the purchase order and the good receive note. And definitely when making the payment based on the invoice, that invoice has to be 100% agree with the purchase order and the good receive note. Both the statement, I'll explain. So it shouldn't be only one document, both the document has to be agree with the invoice. Let's say we are ordering 1,000, right? We are ordering 1,000 and the supplier has done a mistake. As a result, he has like a small mistake with the 0 and he has delivered 10,000. We have requested only 1,000 items based on our purchase order. The vendor has, the supplier has delivered 10,000. He has additionally mistakenly put another 0 at the end of the number, 10,000. So our good receive note says 10,000, purchase order says 1,000. Do you need to make the payment? You should not. You should reject the balance 9,000, right? So if we have ordered 1,000, what we should receive is 1,000, not 10,000. Let's say what happened if we are ignoring the purchase order and making the payment based on the GRN. GRN says, okay, we have received 10,000 units, and actually physically also we have received 10,000 units, and the supplier also has sent an invoice to 10,000. So we are comparing only the GRN and the invoice. Both the documents are equal, 10,000 units. We are making the payment happily, which should not be the case, right? So we should cross-check with the purchase order as well, whether we have received is what we have ordered previously. If we need 1,000, we need only 1,000, not 10,000, right? We should make the payment for 1,000. So that is why I said purchase order, good receive note, and the invoice. When making the payment based on the invoice, definitely the invoice should be cross-checked with the good receive notes as well as the purchase order, not only with the good receive notes, right? So that's the simple process of a procurement. Very important. These documents, PRN, purchase order, delivery note, good receive note, and finally the invoice. So this delivery note is something external which is prepared by the supplier, which we don't have good control over it. So therefore, we are preparing our own document, that is a good receive note. Once we receive the good, we prepare a document, this much of goods we have received, right? Based on that only the payment should be made, right? So dear students, so these documents are very important. So I have explained these documents in a separate slide, right? Few explanations are there. You can see purchase requisition note, purchase order, quotation. A quotation is something which I haven't included. Now, when you are selecting the supplier in this diagram, you can see that the procurement department is raising the purchase order and send it to the supplier. Now, I told you that before that, the supplier selection process is also should be there, which is not addressed here. So that means, let's say, out of 3-4 suppliers who's supplying laptop computers, you can select one supplier, right? So normally the first step is selecting a supplier is to requesting them quotations, right? So we are going to purchase this much of laptops. send you a quotation. Then supplier A is sending his quotation. Okay, we will provide a laptop with 100,000 worth of 100,000. Then the supplier B is sending, okay, these specifications are there, so we will give it 125,000. Supplier C is saying, okay, we are having these qualities and these features, so we will give it 150,000. By evaluating those quotations, the procurement department can select, okay, this particular supplier is a suitable supplier, we will go ahead with that. Understand? So the quotation is a document we can use to select the supplier. So normally quotation is not a source document. Okay, so which is not a source document like the good receive note or the supply invoice or delivery note, which is you prepare just to get information from the supplier. So make sure that, so there can be in tricky questions like whether the quotation is a source document, to test whether the quotation is a source document or not, right? Which is not, which is a document prepared by the not prepared by the company, prepared by different vendors to give their information to the company. Based on that information, we will select the supplier and then we will start our procurement process. Under that, the other source documents are coming: the purchase requisition note, purchase order, good receive note, and the final the supplier invoice, right? Okay. Okay, we'll come to the next slide. That is the objectives of controls in procurement department. So these control, the objectives, actually the final objective is to ensure that there are minimal errors or frauds in a business process, right? So these errors and fraud can happen at different stages, right? So these are the stages. So by implementing a good business process, implementing good internal control system, so these are the objectives we are expecting. At the recording level, all purchases and related payables are recorded at an appropriate value, right? So now when we are following this step in the previous slide, right? So if you are following these steps correctly, and if you can make sure that all the documents are in line, right? So automatically the objective is fulfilled, that your purchase and related payable recorded, the the, the, the all purchases and related payables are recorded at an appropriate value. It automatically happens. You requested 1,000 units, and you ordered 1,000 units, you received 1,000 units, and you paid for 1,000 units, right? Accordingly, your accounts also automatically get updated for 1,000 units you have received, right? So that's why if you miss one single document in that process, let's say you miss the purchase order, you ordered 1,000 but you received 10,000, good receive note is prepared for 10,000 and invoice is also paid 10,000, and your accounts is also get updated for 10,000, where the accurate amount is 1,000. That's right. So if you miss one single point, one single document or step in this process, the possibility of getting incorrect numbers to your general ledgers, right, can be incorrect. That's right. So if you are following all the steps, it automatically get updated. Then when it comes to the cash payment, right, payment is made only for the good received. If you are tallying all the documents, automatically it will get done, right? Ensure no duplicate payments are made, right? Timely payments, all these objectives are automatically fulfilled, right? So when the invoice is received, at that point also, then when goods are received and when ordering goods, so you can read and understand. Just follow that steps. And another important point in your exam question, now it is coming like a case study, right? 25 marks case study question. So out of that case study, out of that 25 marks, maybe around 20 marks can be allocated directly to these process. If you are taking your very latest question paper, which I will discuss at the end of the session, if you take the latest year 2020 January, the 20 out of that 25 mark question, 19 marks they have directly allocated to a process, and that is from the procurement process. 6 marks they have allocated some other areas like the corporate governance, and different areas can be there. 19 marks. So how the question comes is, they are giving you a case study with some information. The ABC company, they are in the manufacturing of this particular item, they are ordering this much of goods, so this is how they are doing that. when the goods are delivered, the storekeeper give a telephone call to the relevant required department that the goods have received. Then one of the representative come to the stores and collect the goods. And likewise, they will be giving you a case study with some information. So what is required from you in the exam is to identify what are the weaknesses of that case study. Right. So in order to identify the case study, weaknesses in the case study, so definitely you should know the right steps of a procurement process appearing in this slide. So make sure that you are very thorough with this process, all the documents, who prepares, what are the information included, all those informations are included in the slide. So you can understand. If you know the right process only, you can identify in the exam, in the given process, what are the weaknesses of the given process. Understand? So it's very important. Business risk in the procurement process, right? So this is also a bit important. Now, when you are having a procurement process, right, like there are several business risks, right? You best know what is a risk now. At the second chapter, we have already discussed, right? Some unfavorable, uncertain incident happen in the future may result in some negative repercussions to the business organization, right? So there are few business risks attached to a procurement process as well, like the supplier is unable to provide the goods, right? Goods are not, it's not the quantity you ordered, right? And maybe you are purchasing at an excessive price, right? It's not the right condition, right? Likewise, there are few things. If you are not following a good procurement process, right? So what are the business risks you can have? So that's also important. You can read and get a thorough understanding on the areas, right? So with that, we'll come to the second process, that is our payroll process. Now, this is also a very important process, because if you take a normal business organization, salary and related costs like EPF, ETF, right, and some other related areas like pay, taxes. So this particular line item represent a larger portion of a business organization's cost base. Now, if we take the cost base of a normal business organization, like somewhere around 30-40% directly represents by the payroll related expenses in most of the business organization. That's how it happens. There can be organizations running at like with high-tech technological based companies, right, with the higher values of machines and all, lesser number of people. But in most of the organization in Sri Lanka, the salary cost represent a significant portion of their financial statements. So as a result, the focus we should give on these areas is also very important. So here also we need to understand how an error or fraud can happen, right? So if we take the key function as the salary, payment of salary. So what are the key risks attached with the salary payment is mainly make an overpayment, right? So there are companies, they are making some excessive payments, right, as salary, which they should not. And most of the companies with large amount of employees, now if we take some garment factories or some manufacturing organizations, right, there can be 1,000 employees can work, right? So in a given time, the top management is not aware of the exact number employing in that particular company. The best example I'm saying, let's say in a garment factory, there are like, let's say 10,000 employees are working. Let's say the real number is 10,124, right? But any given time, the top management always thinks that, okay, the staff card in our company is 10,000 with the, so it's easy for them to keep in their head as a round figure. But if we take the real actual number, it's 10,124, 5 or 6, something, some odd number like that, right? So most of the people are not aware of the exact staff card. So probably the HR manager, the head of HR, or maybe head of finance. So these very few people know the exact amount of employees, right? So they can easily commit a fraud here, right? Okay, the exact number is, let's say, we'll take it the other way around, like the top management thinks that, okay, 10,000 employees are working, but the real number is 9,950, 9,960, right? That's the exact figure, but most of the time people used to say that, okay, we are having 10,000 worth of staff card. But the HR, head of HR or head of finance, a few people know that, okay, there's a 40 employee gap. In between this 40 gap, they can easily commit fraud, right? Okay, they are actually having 9,960 employees, and they create some, we call them dummy employees. They create some dummy employees, like, okay, some incorrect, some false employee numbers, false names, and some accounts also open, right? So physically, only 9,960 employees are working, but at the end of the month, the salaries are going to 9,980 people. 20 dummy employees can be appear in the staff list, right? So physically, you can't find the top management, or maybe to the auditor even, it's not practical to find out, to count each and every employee. It's not practical, right? So likewise, some frauds or errors can happen in this particular area when the number of employees are huge, right? So the possibility of happening of error is also really high. So that's why this payroll process also very important, and we have to make sure that the relevant controls and the processes are steps are followed accurately. And not only that, there are some statutory parties, some regulatory aspect is also there when it comes to EPF, ETF, pay taxes and all. So we need to make sure all these things are happening accurately on time. Other than there can be a compliance risk, right? So we are not paying the EPF, ETF fully to not on time, right? So as a result, there can be so much of negative repercussions. So therefore, this process is very important to understand where error or fraud can happen, and to establish relevant steps and controls, right? Okay, so this is the so in this payroll process, we need to discuss not like the procurement process. In different areas, we need to apply separately, right? The first one, the main area under this process is the salary payment, right? So whether we are making overpayment to the employees, or we are making underpayment to the employees, right? So we need to make sure that we are paying accurately, right? For the people who have worked, and for the days they have worked accurately. Understand? So you can easily follow these steps, right? Capture attendance accurately, then the gross pay deduction and net pay computation, then the adjustments such as adding allowances and some no pay deduction and all those stuff, right? Then the final payroll calculated with approvals and pay slip produces. Then the payroll and other related costs are recorded with the payment made to the employees. Then finally, payments to these other taxes and relevant authorities, it has to be happen, right? So similarly, here also the objectives by having a good payroll process. First one is the attendance capturing. Employees are only paid for the work actually performed or days attended. So if you are following a sound process, like let's say the company is paying for the actual people who have actually worked, right? And for the days they have actually come to the business organization. So the best method is to have a good attendance capturing process, and there are a few high-tech methods we are using at the moment in most of the business organization. I will discuss in a later slide, right? So if you are following these steps accurately, we can make sure that if the attendance is captured accurately, they are paid accurately, so we can guarantee up to a certain level. Then the amendments updated accurately to the correct employee. Recording all payroll related payments are recorded accurately in the correct period and in the correct accounts. Payroll computation, only genuine employees are paid and no dummy employees. As I explained, employees are paid at the correct rate, deductions are accurately considered. Then finally the payment correct amounts are paid to the employees and other authorities such as tax authorities and provident funds. Payments are made on time. Payment is made to the correct employee. So by having a good payroll process, you can make sure that these objectives are fulfilled. As I told you, it's not like the procurement process. We need to take these areas separately. And another aspect is when a new employee join in the company or leaving the organization, right? So how a fraud can happen here is, uh, let's say if there are no solid process attached here, the head of HR or relevant authorized person can always claim, right, and always remit some salaries to his personal accounts and claim that a new employee joined. Each and every time he's saying that, okay, a new employee joined on 1st of January and he resigned 20th January after working 20 days. And 20 days worth of salaries have been remitted to account. Physically, you can't find that person, right? So that's why we need to establish a solid process which is coming under the normal payroll process when we are recruiting a new employee, right? So let's say HR department or let's say finance department need a accounts assistant, there's a vacancy, so there should be a formal documentation, recruitment requisition note, RRN, right? There we are officially requesting, and most of the time these things are now happening via email, so that's also acceptable. Requesting that, okay, the accounts department is required another assistant accountant, please go ahead with the recruitment with the approval of the chief financial officer, right? Then that particular document goes to the HR department. Then they are doing their recruitment process, that is HR related function, right? Selecting candidates and having all the interviews and selecting the final candidate. Then once they appoint the employee, they should prepare another document called staff appointment form, right? And that form should be sent to the payroll officer with the relevant details, this much of correctly the date of appointment, right? In that particular month, how much of salary he is entitled, likewise, right? Then based on the staff appointment form, the payroll officer should enter his detail into the payroll system, right? So then you can accurately capture, like let's say there is a payment made to a new employee. If at any given time, anyone can question, okay, oh, this is the employee we have recruited, this is the process, the finance department requested the assistant accountant, so this is their requisition, and this is his appointment form, and this is what the payroll officer has been entered to the system. Likewise, the steps are very transparent and clear. Let's say that particular employee resigned after working 10 days, right? He decided this is not the best place. He decided to resign after 10 days. That when the resignation is also happened, the same process has to be continued likewise, right? Now there is a payment, there is a salary payment made to an account, right? That particular employee is not physically there anymore because he has joined first, resigned on 20th, only 10 days. And even though he is not there to prove that the payment is a valid payment, genuine payment, the relevant documents are there to prove that actually a person like that has been working in the company during last 10 days. That's why. Okay. So just read the detailed descriptions given in the slide and even in your textbook. These things are very detailed. You can read and understand. Right. So it's very easy to understand from the diagram. Right. So with new techniques and when it comes to the attendance record, I told you that's a very important measure, right? So as I told you initially at the beginning of the payroll process, the biggest risk is we are paying salaries to the employees who are not existing, right? So simply the dummy employees. So therefore, this payment should always be in line with the attendance, their physical appearance in the business organization or the attendance, right? So that is why most of the business organization, not most actually, all the business organization, this attendance capturing systems are maintained, right? So previously it was manual, and still there are some places they are continuously having this manual method that the employees sign in when he is in and coming to the business organization as well as leaving the business organization. They have put the time and their signature, which is a very traditional and not a good method, because signature is not a very sophisticated control these days with the errors and frauds happening, right? So you can't just rely on a physical signature put on a paper, right? So anyone can put the same signature, right? So that's why it is not considered as a very good method. So as a result, the latest technology has come up with this biometrics equipment, that is your thumbprint, right? So when you are entering to the business organization, you can keep your thumbprint. Automatically it captures the in time, and when you are leaving the organization also, you can keep your thumb and it automatically captures your leaving time, right? So that's a very good method. But when the technology develops, the frauds and error also are developing, right? So there are incidents, in practical incidents, right? Sometimes the HR manager or the whoever the relevant authority with this function, combining the IT manager, IT head, and the HR manager, right? So they can create few thumbs, right? So let's say when the HR, the head of HR or the head of IT or some employees relating to HR or IT who are having the access of this system, right? So when he is coming, he is keeping all 5 fingers to the thumb machine, and which represent 5 dummy employees, right? So at the end of the month, salaries are transferred to their accounts, no physical employees as such, and the salary will be shared by whoever the people who combine in committing the fraud. So that's also have been like very commonly used today, but that's also expiring with the technology. And the latest is the swipe card. Every employee is given a unique ID card, and when he is entering, he can swipe his card. Maybe in the door of the business organization, when he is swipe the card, the door is also automatically open, and the in time also automatically capture. So that's can be considered as the very latest and a very reliable method using today's context, right? Then another important area, the running the payroll, right? So this is also very important. Normally in a business organization, there should be a separate person, kind of an independent person, who is the one running the payroll, right? And this particular line item, the payroll, is always considered as a confidential information, right? The salaries of employees should not be a public information, right? It has to be a very confidential information with the right capabilities, right? With the right qualities. There should be a separate person called payroll officer. Most of the time, HR departments or finance departments. So these two departments are processing this payroll function in with the nature of most of the companies, right? And there's another important part you can see in this third box: salaries paid in cash and unclaimed salaries. This is also a very common area where fraud or error can happen, because now if we take some business organization where casual employees are working, like most of the employees are working on casual basis. They do not have like it's not like a permanent job. They are working today. At the end of the day, they are taking their cash and going home. Tomorrow, if they feel okay to come to office, they come. Not to the office most of the time, to the workshop, workplace. They come, they work, they get the money, they go, right? It's simple. And most of the time these salaries are paid on like a weekly basis or monthly basis. Like we can see these things in these construction sites, right? Most of the people are working. At the end of the month, they are taking their salary and they need it by cash, right? So let's say there are 1,000 employees are working in a construction site. At the end of the month, when the payroll officer go to the site and give the salary packets, right? The physical cash, put it into a letter cover and give it to the employee. Let's say only 950 employees have come on that day, and 50 salary packets are now available with the payroll officer, which is not distributed. So what to do with that salary packets? Okay, which is a very common area, because now keeping those salary packets, right? And especially these employees are casual. Maybe like they might not appear tomorrow. Understand? So therefore, there's a high possibility of committing a fraud here. Like the payroll officer can put a one salary packet into his pocket and he is writing the name and the particular employee's name and put a fraud signature and taking the salary packet to his pocket, right? So therefore, a formal procedure has to be established under salaries paid in cash and unclaimed salary category. Most of the time, these unclaimed salaries should be transferred back to the office and should be kept in a vault area, right? In a locker or something, right? And it's very important if you can just deposit the remaining money into a bank account, right? Whenever the employees are coming back to claim the salary, then you have to follow the relevant steps, right? So it's a very important area, commonly tested area as well. So have some focus on that area, right? Here also some business risk attached to the process is mentioned. So you guys can, as I already explained, there are some compliance risk attached with them. If you are not paying the pay, PF, VDF on time, what will happen? There are so much of negative repercussions, right? So these are the business risk attached, and the employees are underpaid, employees are overpaid, right? You are paying for resigned employees, right? Likewise, and you are paying for non-existent employees, right? There are so much of business risk if you are not following a solid payroll process, right? So with that, we'll come to the next process, cash management. Very important once again, because in auditing, cash is considered as a desirable asset, right? So cash is something which can persuade you to do a crime. You are not a thief. Like simple example, let's say you are going somewhere, right? Let's say you are going to the classroom and nobody is there, not even a CCTV camera, and you see that the cash bundle is on top of the desk or the table. And you are not a thief, but your tendency to take that cash and put it into your pocket is always high, right? You are not a thief or you are not a person like that, but still by looking at cash, it can persuade you, like you to crime or fraud. So therefore, it's very important area, cash management process, especially the people who are attached with the cash, right? The cashiers, right? The petty cash holders. So these people, there are solid control should be established with these people. It's not that you are not, you don't have any trust on these employees, but with the nature of the asset cash, you have to establish good processes to make sure that your cash transactions are recorded and your cash asset is managed well. So there are 4 areas you need to discuss: cash receipts and payments, reconciliation, and petty cash management. So these 4 areas I'll quickly go through. Receiving a payment, in most of the time, now before moving to the cash process, I need to inform that in most of the business organizations are now uh, refusing to use this physical cash, right? So over the last couple of years, right, most of the business organizations are using checks, right? Whatever the payment they are making, they use a check and they avoid the cash transactions as much as possible, because it's easy to do, as well as it's a good control as well, right? So you don't see any physical cash. If you need to make a payment to the supplier, you are just writing a check, right? It avoids the cash movements in the business organization, right? So when you are making a payment, that's possible, but when you are receiving money, you can't expect the customers to pay you only in by checks, by using checks, right? Sometimes customers are paying by cash as well, right? So therefore, you need to establish good processes, good steps, right? Some internal document system to deal with the cash receipt in the business organization. If you are receiving a check, no issue, right? You can update a check receiving register, right? Write all the checks in the name, bank, amount, supplier, the purpose of the payment, everything you just record in a book, right? At the end of the day, deposit the checks on the same day or on the following day. Deposit the checks into your bank accounts, and once the bank statement comes, you can clearly cross-check whether all the received checks are deposited in the bank with the bank statement. Very easy and very clear. And if the receipt is happening via cash, right? So then also you need to update your cash book then and there, then deposit the uh, collected cash on the same day or on the following day. The same day option is not practical because most of the banks are closed at 3 p.m. where your business of your office is closed at 5 p.m. So most of the time it's on the following day. But there are now banks also very flexible. There are branches with like 24 hours and open till 6, 8 p.m. right? So to provide that facility, and most of the business organizations are now depositing their collected cash on the same day. As soon as you deposit your collected cash, the frauds or the errors are very minimal. Don't keep it with the company even a single second, right? That's where the fraud can happen, fraud or error can happen. As I told you, cash is a desirable asset which can persuade you to do a crime. Let's say the best example, let's say you are a cashier, right? So there are so much of cash collecting to you, and at the end of the week only you are depositing the cash. During that particular week, the cash is under your custody. And let's say there is a sudden personal cash requirement coming to you, right? Some family problems or something, some personal requirement coming to you, and the tendency of taking that cash from the drawer with the intention of replacing before the end of the week, right? That's also there. But still, your tendency to take that cash in the drawer is really, really high, right? So it will end up with so much of repercussions. So that's why don't keep, as soon as possible you collect the cash, just deposit in the bank account, right? So that's the key areas coming under receiving a payment. So we'll move to the making a payment, and most of the time the payments are happening through the checks, right? When making a payment also, you can see the first step, receiving the supplier invoice, which is the continuation of your procurement process, right? You are receiving the supplier invoice, then you prepare your internal document called payment voucher, right? And the payment voucher should be authorized after comparing with the supplier invoice and the GR and PO. Make sure that it's happening. As I explained in the first step, procurement process, that GRN and PO should be in line with the invoice, then only you can go ahead with the payment. Once you decide the payment, you have to decide the mode, whether you are paying in by cash or check. Most of the time it's by a check, right? So prepare the check, submit for signature, and most of the time these checks are with dual controls, not only one thing. Most of the business organizations are like at least 2 minimum signatures should be there for a check. Accountant plus the CFO for a certain limit. Let's say the amount is the check's worth of 1 million above, it should go to the CEO. Likewise, you can have your own controls to make sure no fraudulent cash payment is going out of the company, right? That's the when you are making a payment, right? And that's another important area is the bank reconciliation. Bank reconciliation is considered as a very important because which is a good internal control, good financial detective internal control. In order to make sure your financial statements are reliable, you can implement a financial internal control at the same time. So bank reconciliation is acting like a financial control as well as it's a detective control. But once something happens, you can easily find out with the bank reconciliation. Simply, most of the business organizations are doing business with the bank by using a bank account, current account. All the transaction happening in the business organization is recorded in the bank as well. Okay, and the third party is also recording all of your transactions. So at the end of the month, you are just comparing both the transactions, what you have recorded in your books, what the bank has recorded in their books, and you are just comparing and preparing the bank reconciliation which is not tallying, right? So, and you can easily find out if there's an error or fraud happening by using the bank reconciliation. Very important. And I think no need to explain much. You guys know what are the items which will cause a difference in a bank reconciliation, right? Unrealized checks, right? You have deposits, but those checks have not been realized yet. Then the unpresented checks, you have given the check to a supplier, but he has not presented it to the bank yet. And then the bank charges uh, errors at the same time, and some standing instructions, direct deposits, right? Sometimes customers, before coming to the business premises, they are depositing advance first to your bank account and then come with the deposit slip. Then only you realize that, okay, there is a bank deposit in unknown bank deposit in the bank account likewise. So you are just, when reconciling these items, you can easily find out whether any unauthorized transaction, unauthorized payment, unauthorized cash deposits has been coming to your bank account. Very important. Right, then the final part coming under petty cash management process is the petty cash management. As I told you, most of the business organizations are now doing business with the current account by issuing checks, but still in Sri Lanka there are some small expense line items for which you can't use a check or a bank account, right? Simply you need physical cash. Let's say you need to buy some sugar from the boutique next to your company, so you can't give a check to the shop owner, right? So you need some amount of physical cash to purchase those sundry items. The best method is to maintain a petty cash float. So the process here is you are one particular person should be responsible for that. Okay, you are just assigned, let's say, assistant accountant as the petty cash holder, and you are giving some physical cash, let's say 10,000 rupees to him, and to manage that for the month for whatever the petty cash requirement. Let's say a person who needs some, let's say 500 rupees for some petty cash like a tri-show charge, right? So he need to request, right? We call it petty cash advance requesting form. You can see that in the right hand of the slide. Just look at the box, cash advance requesting party. Let's say one employee, he needs 500 to travel in a tri-show, right? So he needs to prepare a document called, and this document is available in most of the organization, the petty cash voucher, just to fill the name, amount you required, the purpose, the authority, signatures, likewise all these informations are there. You can get the petty cash voucher, right? And then give that petty cash voucher to the person who's managing the petty cash, right? And then he will look at the relevant authorities, signatures, and give the required amount. Okay, the 500 rupees is given to the party. Then he is using that 500 rupee in his whatever the required purpose. He travel by the tri-show, right? Let's say 450 was the charge, right? He need to get a bill from the tri-show driver for 450 rupees, and with the balance 50, he need to hand over the bills to the petty cash owner, right? Then likewise, this entire 10,000 rupee will be used by different people, right? And once the 10,000 is full, right, the entire 10,000 has been utilized, the 10,000 worth of bills can be accommodated to the main accountant or the person who's having the main cash handling personnel, and reimburse that 10,000 back, right? So at any given time, this petty cash holder should have, if the float is 10,000, he should have a physical cash plus the invoices, which the total should tally the 10,000 rupees, right? So that is the process. Very simple process, but a fraud can happen because it's cash. That petty cash holder always can do a crime, as well as he can take it for his personal uses with the intention of replacing back, but still it's not an acceptable method. So by having a good process, by having solid steps under this petty cash management, you can make sure that your cash is managed well. Right. So with that, we'll come to the fourth process, that is inventory management. Again, area where frauds can happen, because not as cash, sometimes the goods also may be persuading you to do a fraud, right? So let's say you are the storekeeper and you see so much of valuable items in the stores. The if there are no any good control systems, right, the tendency to take those items and taking to home is possible, right? And which is happening very commonly in most of the business organization. That's why you need to place good controls under inventory management process, right? So these are some background works. When it comes to inventory, you know that the raw material can be there in the work in progress, finished goods, and some other consumable items as well coming under inventory, like the other consumable means like stationery. If we take some, let's say agriculture related company, some spare parts of tractors and all those stuff, then fertilizers, right? And there are some companies, let's say for their use, they are purchasing this bottled water, right? So there was a seasonal offer. They purchase a huge lot of bottled water for the consumption of the company, but they can't just directly expense the entire lot. So they can keep it under the stores, right? Keep it as inventories and take one by one when they are consuming, right? So those these things are coming under inventories, right? Right. So here also, like the procurement process, actually this is a continuation of the procurement process. Okay. Now, the example I took for the procurement process was the laptop, but just assume you are a manufacturing company, you are ordering some, the relevant department, production department is ordering 1,000 meters of fabric for their manufacturing process, right? Okay, so procurement process explain how to purchase those fabrics, and the fabrics are coming to the stores, right? Now the next step is you are the production manager, right? You need 500 worth of 500 meters of fabric for your production process, and you are requesting from the stores, and store manager, storekeeper is issuing goods from the stores to you whenever you require. So that process is coming under the inventory management process. There are so much of document attached here as well, very important documents which are using in very commonly in today's business context, right? Before moving to these documents, right? So I will quickly go through this process, right? So it's not the after this slide, just skip the 3 slides appearing these documents. I'll explain this chart and then come to the documents, right? Okay. Now this, let's say the requesting department is a production department. The shirt section, okay, the section where the shirts are manufacturing from this garment factory. Now they are requesting, they need 500 meters of fabric, right? So they are preparing a document called Material Requisition Note, MRN, very common document, MRN. Keep this abbreviation in your head, very important. MRN, Material Requisition Note, and send it to the stores, right? Then once the storekeeper received the MRN, right, then he need to issue goods. Let's say he is requesting 500 meters of fabric. Now the storekeeper should issue 500 meters of fabric with another document prepared by him, that is material issue note, MIN. Understand? So this MRN and MIN has to be equal, right? So there can be 2-3 MRN which should tally with the 1 MIN, or at the other way around as well, right? So material requisition note is coming to as a 500 meters of fabric, right? So the store has only 300 meters, right? They are issuing a 300 meter first, then they quickly order it from the supplier and get another 200 and issue another 200 on another day, right? Now 2 MINs, which is equal to 1 MRN, or 2-3 MRN equal to 1 MIN as well. No issue, but the number appearing in the document has to be equal. So once they are issuing the goods, the requesting department has to make sure that whether they are having the right goods, right? If the goods are okay with the right quality, they can accept. If not, they can reject it, right? When you are rejecting the goods because of some quality issue, or no point of keeping the goods in the stores, right? So you need to return it to the supplier as well. So you can prepare a document called credit note, right? So it's like a, let's say out of that 500 meters, 50 meters it's not up to the standard, right? So you can issue a credit note worth of 50 meters and return goods to the stores, right? Okay, now we'll come to this document material. First one is material issue form. This is so first one is material requisition form, MRA, right? A sample is there. When a production department needs some information, they are requesting material requisition form, and this information should be included: the user department, the date they require, store code, number, description, whatever, then the authorized person signature, right, which is important. So based on that only, then the material issue note is prepared by the storekeeper, there should be a reference number to the MRN in the MIN, as I told you, right? Numbers should be tally. Then the details of material issued, the authorized signatures, and all of this information should be there. Then return. The credit note, right? If you are returning some material to the stores, again, you need to prepare this credit note or material return note, right? So normally, the word you can use is the credit note, because the material return note again come as the MRN, right? So you can confuse with the material requisition form, which is also the MRN, right? So therefore, you can use the word credit note as well, or formally material return note. So relevant reference should be there to the material issue note and material return requisition note. Okay. Likewise, then the user departments, the details of the inventory, everything has to be included. Right. Then next part is, now this is the material issuance and ordering part. Now storing inventories, material, which is also very important, because there are so much of business risk. As you can go to the next slide directly, by like when you are storing some goods in a warehouse, right, there can be so much of business risk attached. Right? You need to make sure that all those business risks are addressed in advance to avoid the negative repercussions coming, right, by having a good inventory management system, right? So we will first go through the risk attached here. The risk of shortage of importance inventory item, right? Let's say you are having this continuous production, because the continuous demand is coming from the customers. Then suddenly the production stops because no material in the stores, and your deliveries also stop, and you will end up with losing the customer as well. It's not a good sign at all, right? So therefore, you have to make sure that the continuous supply is happening from the stores to the production departments on time with the minimum requirement. So therefore, you need to manage the inventory system well. Then risk of excessive inventory level. Sometimes you will realize that you have ordered so much of inventories in the and so much of inventories in the stores. There are so much of cost attached, like the insurance cost, the holding cost, like the damages, expires, and all those stuff, right? So if some some disasters happen, like a fire or a flood situation, the entire lot of the inventory is gone. Likewise, the cost attached is really high, right? Then the physical risk to inventories also can be there, like I said, the fires or some flood situations happen, the physical things. Then the risk of errors in stock records, right? That's also a business risk, because there are so much inventories coming in, the possibility of getting an error here is significant. Then the fifth one is risk of issuing inventories to people who should not receive those, right? So you don't have proper system or proper inventory management mechanism, right? The people are coming and requesting inventories, and you as the storekeeper, you give goods to the relevant parties. No records, nothing, no proper documentation, right? There's no responsible party at the end of the day when the inventories are missing. Then finally, the risk of accepting goods without referring order details, right? For proper order details, that's why with all these documents, right, you will fulfill in that. So in order to make sure these business risks are not having, or no negative repercussion is coming to the company, you need to make sure that proper inventory management system is maintained in the business organization. Now we'll come to this slide. Inventory storing. Following factors should be considered. Easy to issue materials when required, right? So when you are storing inventories, right, it should be easily accessible, right? Then it should be able to identify the current level. Okay, now let's say you are issuing 500 meters of fabric, and that's the last 500 meters available in the stores. Then suddenly there should be a mechanism for you to know that, okay, I am issuing the last 500 meters of fabric, then definitely I should order more, right? So that level should be clearly visible. Then should be able to identify the location of each inventory item. When someone is requesting some material, from top to bottom, you can't search again and again and again, right? There should be a formal way of ordering storing goods. Then protection is a must, right? Sometimes some damages you should avoid as much as possible to those inventories. Then you should be able to efficiently use the space available. Understand now, when you are having a store means that's a huge cost to the company, right? With the electricity, with the maybe building rent, insurance, right? Lighting, the security guards, with all those stuff, it's a huge cost. So, right? So therefore, your business process should be sufficient enough, right? Suitable enough to make sure you are using that space, given limited space, in a very efficient way as well. Understand? So which is also coming under this step. Then maintain bin cards with details such as dates, quantities, and goods distribution. The bin card system is a very traditional but still commonly used method, still valid. It's a very good method. Like bin card means like you are maintaining one single card for each and every inventory item. Whenever you are issuing, you deduct the issued amount and the available quantities appearing in the card. Likewise, for each and every item the card is available, you can easily manage the inventory. So those are the areas you need to consider. On the right hand side of your slide, you can see that the another concept, right? The inventory coding system, which is a very popular method these days. Each and every inventory is having a code, right? Maybe a manual number, or with the technology now it has come to a level of having a separate barcode, right? So you are just scanning the barcode, the system automatically updated how much of inventories you have ordered, you have issued, and now how much of remaining in the system, right? In the perpetual inventory system, right? So that means continuously your inventory system is managed, right? Now perpetual inventory counts means whenever you have ordered 1,000, then you have issued 100, now remaining quantity is 900, now then you are issuing another 200, remaining is 700. That continuously the records are updated, right? But there are another set of inventories you don't need to do like that, right? So you are ordering this much, let's say you are ordering 100 kilos and you are issuing for the production or manufacturing. At the end of the day, you get the inventory count, remaining count. Then you realize that, okay, out of the 100 you ordered, only 20 remaining, then you have issued 80. That's another method of having this. Then inventory count, which is also very important aspect as auditor. Inventory count, there are a few guidelines which we will discuss in detail under the audit evidences chapter as a auditor, how this inventory count should be happen. And but as the business organization, as the management of the company, how to conduct regular inventory count, and what are the procedures you need to follow. There are few steps appearing, you need to focus on those areas, right? So with that, we'll move quickly to the final process, that is the fixed asset process. In most of the business organizations, actually the purchases of a fixed asset process is also covered under procurement process, right? So this is mainly not the purchasing part also addressed here, but the priority is always given to the maintenance, right? And when you are holding a fixed asset in your business organization, what are the internal controls you need to establish, and what are the business process steps you need to establish to have a good internal control system when it comes to the fixed asset management. So you know that what is fixed asset, like the asset which has a useful life of more than 1 year is always considered as non-current assets, right? So we take it as the fixed asset most of the time. The building, motor vehicles, machine, plant and equipment, furniture, office equipment, like these areas are coming under the scope, right? So the controls has to be implemented. Some management process has to be implemented at the acquisition. Then once you acquired, you need to depreciate, right? Then you need to maintain it. Inventory means not the inventory what we discussed. Like here, the inventory means you have to maintain the asset. Then reporting in your books, and once the lifetime is over or you decided to dispose the asset, what are the procedures coming under that, right? Okay. Few differentiation is given. The difference between capital, now this is a very confusing area sometimes when it comes to business processes. Whether it's a fixed asset or not, right? Whether normally we use the technical words or the short forms of abbreviations, capex or opex, right? Fixed assets are always considered as a capital asset, capital expenditure, capex, and your normal expenses, day-to-day expenses, are considered as opex, operating expenses. So capex is, few differentiation points are there. I think as accounting students, you are already aware of these line items for your reference purpose, just to have idea, right? Purchase made less frequently, comparatively large values, right? Reflect non-current assets. On the other side, purchase made often, comparatively low values, and reflect expenses, right? So the the concept should address under this chapter is appearing in the slide, but before moving there, I will quickly go to the diagram flowchart when you are purchasing a fixed asset, some specific points, because this procurement is, as I already explained, when you are purchasing a laptop, right? So that procurement process has already addressed that, but there are a few additional areas because in a business organization, they are preparing something called capex budget, capital expenditure budget. That means now if you need a laptop computer, right? So you should have budgeted it. That's what you are planning your business organization very well, right? So let's say you need to budget or plan first how much of fixed asset you require next year. Understand? So these computers are expiring, right? So we need to purchase this much of computers, this much of furniture, right? We require another additional some office equipment. Our the photocopy machine is going to be like the lifetime is kind of over, right? We better purchase a new photocopy machine. Likewise, you should plan your capital expenditure first, because sometimes a sudden capital expenditure is a huge loss to a business organization, and it is a huge threat to the cash flow management of the company. Understand? Now, let's say you are having a plant and machine which worth, let's say, 10 million rupees, right? So you purchase it during last year and smoothly the machine is operating. What happens? Suddenly the machine is broken and you get to know that you need to replace the machine. The same machine with 10 million rupee, which is unplanned totally. It's a huge amount to your cash flow management system. So that's why most of these capital, not like OPEX, right? Not like your day-to-day purchases, so like not like day-to-day repair and maintenance. Purchasing a new asset may create a huge threat to your smooth cash flow and smooth operation. So therefore, these things should be planned first, right? So therefore, we are preparing something called capex budget, capital expenditure budget. Right now, when it comes to the relevant year, when you need to purchase that, okay, let's say you need to purchase that photocopy machine, right? The document you need to prepare is, but we call it the capex requisition form. In some organization, we just call it the capex form, right? Capex requisition form. You are just raising the document. Likewise, these are the assets you require. This is the price and all, and you send the document to the finance department, because finance department is the place where the budget is prepared, right? So that's why you send it to finance department. Then finance department cross-check the capex requisition form with the capex budget, whether it's budgeted or unbudgeted. Let's say it's budgeted. You can see clearly the green color box. It's budgeted. And if it's budgeted, then you can send the request to the procurement department. Then procurement department will follow the steps we discussed at the first earlier, right? So in the green color box, you can see that procurement was discussed earlier, right? Now, what you need to learn here is if it's not budgeted, right? If it's not budgeted means you can't purchase that. It's not like that, right? So there are some business organizations, right? There are so much of unplanned things, unbudgeted things, unbudgeted capital assets need to be purchased, right? So that's a weakness, but in order to survive in the business, or let's say that machine broken, right? 10 million, now you can't do your business without purchasing a new machine. It doesn't matter whether you plan it or not plan. Understand, whether you budgeted or not, if you need to do the business, you need to purchase the machine, right? So it will go as unbudgeted. But the thing is, if it's unbudgeted, normally the approval should be go to some higher levels, right? Normally to the CEO level or to the maybe the board of directors level. Let's say we need to purchase a building, our building space is not sufficient and we did not plan it whether to increase our business premises, our business opportunities also increase, like our demand for our goods increase, our sales volume increase unexpectedly. As a result, now we need to increase our office premises or maybe the stores. So some building space is required more, which is unplanned, unbudgeted, right? So obviously you need to inform, or the capex form should be taken to some higher authorities like the CEO or above level, probably the board of directors. Then at that level, they will decide whether to approve the capex form or not. Understand? So if the board of directors or CEO decided, okay, we can't survive without this machine, so we will approve, and okay, just go ahead. Then if it's approved, then again it goes to the procurement department, and procurement is happening as we discussed. Then the board of directors or the higher authorities decided that no, this is not required. We can survive in the business without purchasing this machine. We'll budget it for this year and purchase in the next year. And they just reject the capex form. Then it will reject it and it go back to the requested part. So that's the flow chart. In addition to the procurement process, you need to understand the capex budget and the capex form coming specifically for these areas, right? Right. Now we'll come to these areas quickly. Right. So approval for capital expenditure, I explained. Normally it happens through a capex budget. Then the supplier selection process addressed under procurement. Then recording capital expenditure. This is critical. Okay. So you guys know that the relevant accounting standard, right, LKS 16, property, plant and equipment has to be applied here. The recognition criteria has to be properly applied and recorded in your financial statement. Otherwise, if you recorded incorrectly, right, as an expenditure, or you purchase a laptop and you record it as expenditure, your trial balance still balanced, right? Debit credit goes accurately balanced, but you have recorded in the wrong account classification, and as a result, your financial statements are incorrect, right? So you have to focus. Then identification of fixed asset is also relevant, important, based on the accounting standard guidelines. You need to identify whether it's a fixed asset or not, right? There can be some expenses with the nature of non-current assets and very confusing areas like, let's say some development cost incurred by the company. So you will learn these things under the FAR subject when it comes to intangible assets, right? The research and development component, whether the research component is not allowed to capitalize, where the development cost is allowed to capitalize, and you will realize that sometimes a bit confusing to whether this is a development cost or research cost. So you need to follow the relevant guidelines of the accounting standard to make sure you are recording or you are identifying the asset accurately. Then another very important internal control in this fixed asset is maintaining a fixed asset register, right? So this is something like maybe a simple register when you are recording all your day-to-day transaction in a book, or maybe let's say Excel sheet. It's something like that. Okay, so you need to record all the fixed asset related transactions in this particular register. The purchase date, the supplier, maybe the account classification, whether it's office equipment or electrical equipment, then the cost, the useful life, depreciation policy, and where it is located at the moment. That's the very important part. The location of the fixed asset and a unique identification number should be given to the fixed asset, each and every fixed asset. And if you are working, you may have seen in your business organization, all your computers, tables, chairs are numbered, right, with a manual number, or a and very new trend is with a barcode, right? A barcode can be there. So somehow a proper identification number should be there, right, in order to identify. Now when you are in this fixed asset management process, actually there are three things you need to compare, right? First thing, of course, when you are purchasing the fixed asset, you are recording in your general ledger, right? You are debiting your asset account and you are crediting your cash or bank or whatever, right? And your general ledger also now has a balance saying, okay, computer hardware this much, right? So now the question where the error or fraud can happen here is your account balance says you have a 1 million worth of computers, but which is actually not. Physically, you don't have that much of computers, right? So therefore, the ledger balance appearing in your books always should comparable or 100% equal with the physical balance of the assets as well as the so-called fixed asset register. Now I explained a little while ago. Understand? So now these three balances has to be in line. The balance appearing in your general ledger, the balance appearing in your fixed asset register, at the same time the physical asset, right? There can be like, let's say 100 computers are appearing in the general ledger, right? In your fixed asset register also, that 100 computers should be recorded with their identification number and the location, because in your general ledger you can't record the location and the asset identification number. It's very limited information you can credit or debit into your T account, right? Probably the date of purchase, description, and the reference to the other account and the amount, right? All the details, especially the location and identification number, should be appearing in the fixed asset register. And by referring to the fixed asset register, you should be able to go and physically see the asset, whether that particular, let's say that 1 million represent 10 computers, right? That 10 computers should be appearing separately in your fixed asset register with separately the amount, location, identification numbers. And those 10 locations you should be able to visit and see whether the asset is physically there in those areas. I think that's the only thing. If you can have that control properly when it comes to fixed asset, I think that covers most of the areas and that avoid most of the frauds and errors happening in fixed asset, right? In then some other areas like disposal, when you are disposing a fixed asset, those steps has to be clearly defined, the authorities, right? When you are disposing asset, to whom you, from whom you should get the approval, right? Otherwise people will just selling the assets appearing in the company, right? So proper authority has to be flow, right? Then the price, how to make the sale and how to get the price, whether you are using a tender method or whether it's a what do you call this, calling quotations, right? Likewise, you need to decide the mode, and everything has to be written black and white when you are disposing a asset, right? Then another one is physical verification of fixed assets. So physical verification cannot be done if you haven't done the unique numbering part to the asset. So every asset should be numbered and location should be specified in your fixed asset register. If it's there only, you can easily do a physical verification of fixed asset. Let's say you don't have a fixed asset register. Your ledger balance says you are having 1 million worth of computers, and it doesn't say even how many computers are there, and you are clueless. You can't see where those computers are, right? So easily people around these computers can easily do frauds. Computers are, they can take their computers to the home, or maybe like when it comes to motor vehicle, people are using for their personal usage, right? So like these things can happen. So therefore the physical verification should happen periodically. To do that easily, you should maintain that relevant unique number and the location of the asset should be specified. Then finally, physical controls, as I told you, there, because these can be misused as well as can be naturally damaged as well. Let's say computers are there, but nobody is not taking care of those things. Sometimes like the proper attention is not for the relevant asset. You guys know that if it's a computer, like a cold environment should be there, but nothing is happening. Some damages which can cause significant cost to the companies. Likewise, physical controls also should be there, right? So the diagram we discuss, and risk associated with the PP management. First, when you are acquiring asset, the proper authorization has to be made sure, right? Because the values are significant, right? Simply you can't decide I need a computer and purchase a computer company, right? Formal procedure should be there. Then the disposal should be happen with the proper authorization, right? Then the theft, loss or damage can be happen, right? then the risk that non-current asset cannot be found or does not exist. You have purchased 10 computers, but currently available only 5. You don't know what happened to the other 5 computers, right? Then finally, the recording part, whether you have recorded it as you have purchased the laptops, but you have recorded it as an expense incorrectly. Likewise, these things has to be avoided. If you are following a good solid fixed asset process, you can make sure that these things are addressed. So with that, I have covered the 5 processes, and I quickly explain you exam question, and I'm not going to discuss the question paper. And this is your latest exam paper, 2020 January, right? You can see that they have given a case study, right? This Nila, she has been recently recruited as an assistant accountant of HL Hotels, right? And they are covering the procurement process, and they have clearly identified what's happening in this HL Hotel PLC at the moment, right? Then all capital nature item purchased with the approval of board of directors, right? There are registered suppliers. When they need arises for inventory, it will notify the store manager with the system generated request note, purchase orders, and the values authorization. They have given the specific all the details with this mini case study, not a mini case study, it's kind of a case study, right? All the information is given, right? Then look at the question, how it comes. Identify 5 strengths in the procurement process of HL Hotels PLC. Now, I told you initially, most of the time it comes as a very weak business process. A very weak business process. Procurement process is given in the case study. If you just analyze the past papers, you may see 100 good questions. Weak procurement process, and you are asked to identify the weaknesses. In order to identify the weaknesses, you should know the exact process you should follow. But in this particular question, it's a sound business process they have implemented in this hotel, and they are asking you to identify the 5 strengths. But like weaknesses, to identify the strength also, you should be able to identify the strength. You should have the knowledge on how a sound business process should work, right? So with that, you can easily identify these 5 strengths appearing in this procurement process, right? Then objectives, we have discussed what are the objectives, why these each and every, at the end of each and every process, we discuss the objectives, right? Easily you can, right? Then list 2 elements of control environment and 3 control activities, right? That's why I said last week, I told you that this internal control system is also linked with the business process, and the question is coming in a one big question, right? It's very rarely they are testing the theoretical internal control questions like 2 marks, 3 marks can be there, but most of the time it comes with the business process case study, right? Now, first 2 questions, you need to identify the strength or maybe weaknesses as well if it's a weak process, and the objectives, and they're touching the business process. Then they are coming to the internal controls, right? So 2 elements of internal control environment, right? By using the last week's slides, you can answer that, right? Then control activities, 3 control activities, right? So everything is very clearly mentioned in the last big slide. So you just try the question. Then finally, list 2 general controls to be available to prevent unauthorized amendments to data file. Likewise, given example. Okay, so total 19 marks are allocated for this question, right? So that's why this chapter 3 is very important. 1 case study, if you analyze the last 10 past papers, right, 25 marks question have come with a case study addressing the business processes plus the internal controls. Combined, you can easily answer these areas appearing in the syllabus, right? So we'll see whether anyone is having any questions. How to manage if the payment mode is electronic money or bitcoins? Bitcoins are not using in Sri Lanka still, right? So no need to worry about those areas, but electronic money is happening. Now, most of the business organizations are moving away from this check concept as well, which is also very traditional, printing a check, signing on a check. right? Now the companies are having these corporate cash management processes, right? So now, since I'm working in the bank, I am very familiar with the concept. Now the business organizations can have a cash management system from a bank, right? So while they are maintaining the account in that particular bank, they are getting some accesses to software as well. So by using that software, they can make the supplier payments. When they are making the supplier payments from the system, automatically their bank account will get debited, right? And when they are receiving money also, automatically it will get credited to their account, right? It's a very sophisticated system, and things are changing into that way. And most of the business organization, high level business organizations, are now using. So what is important is your mode can be changed. It can be cash, or it can be check, or it can be the electronic payment mode, but still you need to make sure that the relevant control is there. You need to identify where a fraud can happen. Now, why you decided to make a control for your check? Two people has to be signed. Obviously, the accountant or maybe CFO and some higher level has to be signed the check before make the payment, right? So the mode can be changed to the electronic mode, but you need to implement the control to that electronic mode as well. When you are making the system generated payment, right? Okay, the accountant maybe press the first enter, and the second enter should be pressed by the CFO, the CEO, the whatever the higher levels, right? So the control, you don't need to change the control. The mode may be changed accordingly, but you need to make sure your control is also updated to the system. So it's not a big issue. There's another question. When returning ordered goods, what's the source document used? It's a credit note. It's a credit note. It's a credit note. Right? When you are returning, it's a credit note is used. Right. I think that's it. All the questions. So I think you had a clear understanding. And as I initially mentioned, this is a very lengthy chapter, right? It's very difficult to finish within 1 hour, 1.5 hours. So I was just focused on the key areas where a fraud or error can happen, and how to establish a good step or a control to minimize the fraud and error. That's where the focus, but in detail there are so much of other information is appearing in your textbook. Read and understand, especially when it comes to the inventory management system. There are some areas like this inventory management modules, this EOQ module and all those stuff, and some details are there, right? So just read and understand. There are not any hard technical areas. So as third level student of the AAT course, I think you can easily understand. If you have any doubts on these areas, even like I'll be conducting the webinar series in future weeks as well. So if you have any doubts from the previous sessions or today's session, what we discussed, you can continuously ask the questions. No issue with that. Right. So with that, we'll wind up. And next week, we are starting the auditing process. The first step is to identify what is the nature of your audit engagement. And with that, we'll be discussing engagement, assurance engagement we'll be discussing in detail, and audit engagement is also assurance engagement. Before that, we'll be learning what are the features, what are the things you need to learn under assurance engagement, right? Important areas, and probably a new area for all of you as you are learning the subject auditing for the first time. Most of the students. So we'll be meeting on the same time next week with the new chapter, assurance engagement. So thank you very much.
Thank you very much, sir. It's a wonderful session that you have done today. Hope our students would have gathered enough and required knowledge on the internal control subject. Dear students, please join us for the coming sessions or future sessions and enhance your competencies. Thank you.